Three stocks: Ally, Procter Gamble, and United Airlines. All are moving big today. Guys, I need you to do me a favor. Subscribe to the channel. We have a lot of videos coming out this week and next week on earnings. It's earnings season. A lot of great videos coming out. We do 2 to 4 videos a day during earnings season. We throw out a lot of videos. Immediate reaction. We're the fastest, I believe, on YouTube to react with a video on certain earnings. Last night, Netflix reported at 4:05 p.m. We had a video out by 4:30 p.m. looking at Netflix. So, Ally Financial, down a lot today. Right now, it's down 6%. It was down over 10% at one point. So, here are the things. They reported earnings per share of $1.12, but they missed by 61 cents per share. That is a massive miss, guys. Like, literally, companies are butchered for missing by 1 penny. They missed by 61 cents. Revenue came in at $2.02 billion, which was lower by $140 million. But here's the thing that concerns me. It's a little anecdotal. A good friend of mine runs a big dealership out in Illinois. We just texted him before we recorded this. I said, hey, what's the deal with Ally? Because Ally does a lot when it comes to loans for cars, etc. He said, And I said, well, what do you mean by that? He said, listen, when I have somebody who's good credit, Ally will finance them, but their rates are too high because they're making up for the junk loans they do. His comment was they have very, very low lending standards on poor credit customers. When he said that, I was like, oh boy, that sounds like 2006, 2007. Then Ally came out with their numbers. Their provision for credit losses. This is the provision that banks will sit there and hold and say, hey, listen, we expect some credit losses. We're going to account for this. Last year, it was up. Last year was 100 and, I want to say 100 and, I think it was 70 million actually, doing the numbers. It was 76 million. This year, they did $438 million this quarter for credit losses. That tells me they're worried. So with Ally, it's a bank, so it's hard to use our stock analyzer tool, and I don't understand banks very well, but the part of the bank that I do understand is credit losses. So if you need a loan and you have bad credit, you're going to go to Ally. But if you have good credit, they're trying to charge you a lot in order to make up for the bad losses. You're not going to go to them. That's the problem. I'm not saying they are a subprime lender that will go under like the other ones did in 06 and 07, but I just hear that and go, you know what? I got to be a little careful with Ally. Procter Gamble. Procter Gamble is up 2% right now. And that's about where it was today. They announced earnings per share of $1.57, beating by 2 cents, and revenue beat by $240 million. So guys, Procter Gamble is this company it does everything, right? It's based in Cincinnati here. It's got all the home products. You know, you're gonna have a hard time seeing this company massively fluctuate. But right now, it is down from its 52-week high of 165. I think that was actually the high ever. It was the high ever. Let's look at the 8 pillars here for Procter Gamble. All right. So guys, this is what we like to see. If you've watched this channel before, you see that I like this when these 2 X's exist, because these are our valuation metrics. So all I need to do is wait for the price to come down a little bit. And Procter Gamble is not a fast-growing company. Look at our analyst estimates here. For revenue growth, I mean, look at these revenue growth numbers. I mean, these are nothing for the next 6 years. I mean, this is inflation. This is with the economy. They're not a fast-growing business. And in order to justify a higher earnings multiple, like we have here on these 2 pillars, the 5-year PE and the 5-year price to free cash flow, you need a high growth rate or a really high return on invested capital. This is a high return on invested capital. Don't get me wrong. I like that, but I still worry about it going, They're buying back shares, fine. Low debt, great. But this just seems a little high. Let me do a quick stock analyzer tool to decide what price I'm going to pay for Procter & Gamble, because I don't think I have it on my watch list. Let me see why I don't have it on my watch list. Do I have it? I do not. All right, so let's go back and look at Procter & Gamble and add it to my... So go to stock analyzer tool for Procter & Gamble. The growth rate of the revenue growth in the last 10 years was negative 0.5%. Now, they could have sold off divisions. These big companies do this all the time. They'll sell a brand here, sell a brand there. I don't know. But I'm going to look at one thing I want to mention to you guys is, what I thought. That's a solid dividend. That dividend eats up a lot of their free cash flow. Their dividends the last 12 months were 2.8%, paying out 8.77, which is a big chunk of their free cash flow, but very consistent free cash flow. That's the good news. So let's go to our stock analyzer here. Okay, I'm going to go with 0, 2, and 4% revenue growth. Profit margin, 14, 15, and 16. Let's say they crush it. Free cash flow margin, 15, 16.5, and 18. PE. Guys, this is a boring company. 13, 14, 15 with very low growth potential. I've got to get it cheap. Actually, I'm going to do this. 12, 13.5, and 15. 12, 13.5, and 15. Now, desired annual return. And this is why you need to subscribe to this channel, guys, because I go through these and it just repeats in your head over and over until you own it. I still do this every single day. I have 100 companies on my watch list, and I do this every day for that reason. We need a higher desired return than the market gives, 9 or 10% a year. So we want margin of safety and a reason to buy an individual stock. So I'm going to do it. And I don't think there's a lot of risk in Procter Gamble. I don't think it's going away anytime soon. So I'm willing to have a lower return than other ones. But I'll put 12, 13, and 14%. Because the higher my assumptions, I need to get that higher return. Hit the analyze button. The stock's currently at 130. Yeah, it seems like a big drop. Low side of 40, high side of 70, mid price of 50. I'm adding it to my watch list at 70. That does not mean I'm buying it at 70. What it means is, Paul, go back, do your research. Today, I got 2 notifications for 2 stocks that fell big. Generac overnight fell huge this morning, and it hit below my, so now I'm going to do more research on it. Final stock, United Airlines. United Airlines, up 6.5% right now. Okay, here's what happened. They reported $2.81 in earnings versus $2.28 and revenue of $12.8 billion versus $12.75. Guys, I'm going to show my bias here. I'm not telling you to buy the stock. Airlines are a tough business, really tough business. For me personally, I prefer Southwest Airlines. I think they have their ability to generate profit over a long period of time. Before COVID, they had not had a losing year in all those years. I mean, airlines go bankrupt like you and I have, a nice dinner for our birthday. Airlines are a very tough business. Southwest does a great job of saying we're going to focus on 737s and we're going to focus on smaller hubs. They're not trying to go to Europe anytime soon. They want to dominate the regional air business, and I love that. They do a great job of hedging their investments. Now, for United Airlines, look at these 8 pillars, guys. Now, this is understandable. COVID threw a wrench in all of this, and a lot of these numbers have to do with 5-year numbers. I mean, look at this. Their 5-year free cash flow is $200 million. Last year, they did $1.3 billion. Personally, and you probably understand better than I do, I just look at the airlines going, unless it's a no-brainer. And I think Southwest has a lot of potential. For me, I'm happy that United is reporting better. That probably says a lot more about the airline industry than just United. And I look at that saying, okay, we're getting back there. We're looking at all these things. So I look at, if I would encourage you that if you're interested in an airline, check out the smaller ones. Check out Alaska. Check out Southwest. Check out the ones that aren't trying to do anything possible to get more and more market share. I think Southwest and those smaller ones are just saying, hey, listen, we're going to dominate the smaller market. We're going to be great regional airlines. And we're not trying to be, United, Delta, American, they're always fighting for who can be the biggest. And that gives me a little heebie-jeebie there. So that's where I look at for these 3 companies. Guys, a lot of volatility in the market these days. You got to watch our videos. Please subscribe because we go over it. And you'll also see our past videos, over 1,800 videos we've done on YouTube, all in the last 2 years. You'll see us a year and a half ago not being popular. And we said, guys, be very careful. These companies are crazy. You shouldn't be buying. Go back and look. It's awesome. Please subscribe. Thank you very much for your time.